Welcome to another explainer. Okay, let's dive right into this, because today we are looking at a company that is quite literally the unseen force behind our modern technological world. The company is CEVA, and they are an invisible giant powering the physical AI revolution. You probably won't ever see their logo on the devices you buy, but they are absolutely crucial. They provide the foundational silicon and software IP that makes all those everyday devices smart.
Look at that number, 21 billion. That is the total number of CEVA-powered devices that have been shipped globally as of early 2026. This isn't just some niche player we're talking about here. They are trusted by over 400 customers worldwide who rely on their architectural blueprints to build chips and software. That scale is just massive. So that brings us to a really fascinating question. What invisible tech connects 66 new devices every single second? Yep, you heard that right. Based on their 2025 full-year numbers, where they shipped 2.1 billion devices, roughly 66 CEVA-powered devices were sold every second of the year. From smart TVs and wearables to industrial sensors and cars, they're literally everywhere. But how exactly are they achieving this kind of incredible scale?
Part 1. The Physical AI Pivot. Moving beyond the cloud.
So CEO Amir Panush has really steered the company toward this massive new computing trend, and it all relies on a game-changing concept called physical AI. Basically, this refers to devices that connect, sense their environment, and perform real-time AI inference locally, completely without relying on the cloud. So instead of sending your voice command or a camera feed to some distant server, the device processes it right there at the edge. This is a total game-changer. It vastly improves speed, saves power, and really enhances your privacy. And CEVA, they're building the exact intellectual property needed to make this whole thing happen.
And listen, this isn't just theory. It's happening right now in the devices you use every day. Just recently, they secured a dedicated neural processing unit, or NPU, chip win with a top global PC manufacturer. Their NuPro Nano NPU actually won the Artificial Intelligence Award at Embedded World 2026 for bringing ultra-efficient AI to power-constrained edge devices. On top of that, smart edge applications generated a staggering 86% of their total 2025 revenue. Oh, and they are also expanding into the cars we drive through a multi-year collaboration with NXP for software-defined vehicles. So yeah, they are absolutely dominating the smart edge.
They pull this off through a really simple but incredibly powerful strategy stack. It's kind of like a puzzle with three main pieces. First is Connect. They provide the IP for things like Wi-Fi 7, Bluetooth high data throughput, 5G, and ultra-wideband. Second is Sense, offering the data processing for cameras, radar, microphones, and motion sensors. And third is Infer, where their award-winning NuPro AI processing takes all that sensory data and makes intelligent decisions locally. Put it all together, and they provide the complete stack a device needs to actually act intelligently in the physical world.
Part 2. Q1 2026 Financial Surge, translating IP into revenue.
Now, what's really interesting here is CEVA's unique two-pronged business model. First, they license their IP upfront to a customer so that customer can design their chip. In Q1, that hits $17.8 million, which is up 18% year over year and their highest in 3 years. Then you have the second slice of the pie, royalties. Once those customer chips finally go into mass production and ship out in real products, CEVA gets a cut. That sat at $9.2 million for the quarter. So basically, licensing brings in the cash today and builds the pipeline for tomorrow's royalties.
When we take a step back and look at their overall financial performance for the first quarter of 2026, the numbers tell a really compelling story of a highly scalable IP business. Look at those gross margins. GAAP gross margins are sitting at an incredibly impressive 86%, with non-GAAP at 87%. Because they are licensing intellectual property rather than, manufacturing physical chips themselves, their margins are structurally just very high. Now, while they did report a GAAP operating loss of $5.1 million, their non-GAAP operating income was positive at $500,000, pulling in a non-GAAP net income of just over $1 million, or 4 cents per diluted share. But here is the absolutely most crucial takeaway from their recent financials. Over 20% of CEVA's licensing revenue is now driven exclusively by AI processors. Think about that. That's a massive shift. Just a short while ago, they were primarily known just for wireless connectivity. But now, AI is rapidly becoming a core financial engine for the company. It proves for sure that their physical AI strategy is really resonating with the market. And we can see how this diversification strategy is actively reshaping what they ship. Traditional mobile modem shipments are actually down 18%. But to completely cover that decline, Wi-Fi shipments just exploded by 48%, and cellular IoT shipments jumped 42%.
So this massive growth in the smart edge and the Internet of Things is more than making up for the softness they're seeing in the traditional smartphone component market.
Part 3. Current market headwinds, navigating macro challenges. So CEVA is currently dealing with two very contrasting realities. It's kind of a balancing act. On one hand, they have explosive smart edge growth, record Wi-Fi and IoT shipments, major smart TV wins, the whole shebang. But on the other hand, they are dealing with lingering mobile softness. The decline in smartphone modems is part of it, but a much bigger issue has been ongoing memory supply shortages impacting overall unit shipments. Basically, when their customers can't get enough memory chips to physically build the devices, those devices don't ship, and that temporarily caps CEVA's royalty potential in those specific sectors.
Then there is this number, $5 million. That represents a massive incremental expense hit CEVA is taking in 2026. And honestly, the crazy part about this? It has absolutely nothing to do with their technology or their sales execution or anything like that. It's purely due to foreign exchange rates. No way around it. That's a tough pill to swallow.
Let's break down exactly why that's happening. A stronger euro and Israeli shekel against the US dollar is increasing their non-US research and development costs by roughly 10%. Because CEVA has a globally distributed engineering team that's largely based outside the US, they are super vulnerable to these currency fluctuations. So while their underlying expense base is only expected to grow 1% to 3%, the FX headwinds add that extra $5 million hit on top, which management is actively trying to manage right now.
Part 4. The future road ahead, planting seeds for 2027 and beyond.
The catalysts for their future growth are just incredibly concrete. We aren't just talking about abstract silicon IP here, we are talking about everyday things we all use. For example, their AI technology is deployed in the Renesas R-Car V4H platform, which is actually entering mass production in the 2026 Toyota RAV4. Furthermore, management estimates a $125 million lifetime royalty potential just from recently signed licensing deals alone. They're also expanding into next-generation tech like 5G satellite communications and ultra-wideband. Plus, with a really healthy $222 million cash balance bolstered by a recent equity offering, they are actively out there evaluating M&A opportunities to expand their reach even further.
I want to read you this quote from CEO Amir Panush because it really perfectly summarizes the entire thesis of the company right now. He said, as intelligence continues to move into physical devices, this diversified footprint positions CEVA to evolve and naturally converge to drive the next phase of growth. And that hits the nail on the head. They've built the connectivity, they've built the sensing, and now they're layering in the AI inference to tie it all completely together.
Which leaves us with a really provocative final thought for today's explainer. As AI moves away from the cloud and directly into the physical devices all around us, which companies will truly own the smart edge? Is it going to be the big consumer brands, the massive cloud providers, or the invisible giants like CEVA supplying the architectural blueprints for it all? Keep your eye on this space, you guys, because physical AI is literally just getting started. Thanks for learning with me today, and I'll catch you on the next one.